All right, excellent, excellent. All right, welcome everybody. I see everybody trickling in. Up to 123 people. There's a lot different than my Instagram lives, but sometimes we gotta switch it up. We thank everybody for coming on time. And the room is filling up very quickly. Up to almost 200 people. It's excellent. It's excellent. Good evening, everybody. Good evening, everybody. Hello. Hello, everybody. Hope everybody's doing well. So I want to give everybody a heads up. There's probably going to be 300-400 people in this room, maybe more. So we will not be able to chat with everybody, but we're going to give as much information as possible. And at the end of the presentation tonight, we're going to have some questions, a link where you guys could schedule your appointments. Any questions that you have, we're going to be able to help you out. So we're looking forward for everybody to give us to be able to service everybody. But we thank everyone for showing on time. We're going to give another 60 more seconds to make sure everybody's able to join our live today, our webinar. We have two amazing guests today. And it's all about giving a lot of as much free information as possible to put everyone into some type of position to make a move. And then once you're able to be in position to make a move, then you're gonna come back to us and be like, hey, Herman, this worked. I'm ready to do it again. And we're going to put you guys in position. So we're really looking forward to this. We're really looking forward to this, man. All right, so everybody's trickling in. Thank you, everybody, for coming on time. We appreciate you guys. Anybody that's in my mentorship, at 7 on the dot, I start, and we start rolling. But we appreciate everybody coming in. All right, so we are at 270 people. The rest are going to come. We are recording this webinar. So anybody that registered, we have your phone number, we have your email. We will be sending you a replay of this just in case you miss anything. You have to hop off the call, but it's so much important information. We don't want you to miss the information. I'm going to be a fan today. I've been hearing about our special guest today, Ryan, for about 30 days now. So I'm going to be taking notes also for him to teach us the game of how to hack the bank. So I'm really looking forward to this. So everybody that's in the room today, thank you so much for joining our live webinar partnering with Ladder Financial Group. Please go follow them on Instagram, Ladder Financial Group. We're going to be doing another live with Ladder Financial Group. These are the people that help me and my clients get business funding. So we look forward to partner them with you guys because we want to get this information into your hands. So all 300 of you that are in our webinar today, thank you so much. Get your paper, get your pen, all right, get your notes app. If you're on your laptop, get another screen. A lot of information is about to be given out tonight. So please pay attention. And I'm not going to waste anybody's time because we barely got an hour. So we have two amazing guests who have, between the two of them, 30, 40 years in banking industry. All right. So these are major players. If you know anything about me doing business funding, Hiram is one of the gentlemen that has 10x my business. So when you guys see me post on Instagram that I have funded over $25 million in funding in the first 7 months, this is the guy that helps me do it. So that's why he's super important, right? Then we got our partner, Ryan, who's on the call for today. His experience is on Wall Street. His experiences with banking, his experience in the financial industry. These are the people you need to be in front of or listening to give you some free game, to put you in position. And that's what we're here to do, to give you some free game. We're going to teach you how to fish, and we're going to help you fish. And these guys are just going to gut it and fry it up for us tonight. So without any further ado, Hiram, I'm going to pass the mic over to you, bro. Thank you so much for partnering with me. Thank you so much for allowing me to be me and all of our mentees to come on to the call for tonight. How are you doing tonight, bro?
Great. Thank you so much for the opportunity. Truly an amazing introduction. I thank you for that.
Absolutely.
I think that one of the most important things is that we really have a tremendous passion of people being able to now break the veil and go and find some sort of backdoor opportunity. Find something that they'll be able to now find and really put it into use, execute, right? If you know Herman, one of the biggest words that he uses and constantly uses is execute. There is nothing that I can provide you here tonight where you be able to take it, just take this information, write it down and not execute. This is information that we really want to drop down because all in all, if you don't execute, you're not going to be able to get to where you need to get to. So Let's put it into play. Let's put all this into a commotion. Let's make them some sort of something out of this so that you can now obtain what you need to obtain in order for you to be successful in whatever you want to do. Start a business. You want to scale your business. You want to find an exit strategy. Listen, I got so many people DMing me, letting me know, hey, how do I retire before 40? How do I retire before 50? These are the game. This is the game that a lot of times these lenders do not send you. They do not tell you. There's nobody's going to sit down with you and explain to you, okay, listen, you just got a bit too much inquiries because you started going crazy as soon as you hit that 700 credit score. This is the game that a lot of times they will keep that information to themselves because let's be real, banking is very competitive. If I have two lenders, A and B lenders, right? They're not going to tell you what B is going to do because A is going to find out the game and all of a sudden now they're going to saturate the market. So let's dive right into it. And again, Herman, I appreciate the opportunity here. So let me put this on play. Let me get this going here. All right. Share my screen. All right, so hopefully everybody's doing well here tonight. And what we want to cover here tonight is this high limit credit card webinar, right? This is a comprehensive multi-layer roadmap to obtaining high credit limit accounts. This is what everybody wants, right? I don't want to walk in and get a prepaid card. I'm out. I don't want to walk in and go in and get myself $1,000 secured or unsecured account. I want to be able to go in, say the right things, fill out my application the right way and get $5, $10, $20, $50,000 limits. This is the ultimate goal, right? So what we'll be covering here today, bear with me 1 second. What we'll be covering here today is most important and is crucial, right? Again, take out your pen and paper, take out your pencil and paper, right? And let's pay attention to this because again, you need to be able to take these strategies and enforce them and execute. We'll be covering how to get high limit personal credit cards, removing the lending guideline blindfold. There's so much blindfold to the way that banks operate and how they fund deals, how they approve deals, and how they buy deals. Anywhere from A paper, B paper, C paper. And what I mean by that is A paper is going to be that 720 credit score and up. B paper is going to be that 680 to 719. And then of course that C paper is going to be anything under that 680 sun, right? So you want to make sure that you can utilize our proven process to obtain funding using a backdoor method. How to beat the banks at their own underwriting game, because a lot of lenders do have their guidelines. They're investor proven, they're investor driven, right? So you want to make sure that you find the ways that what these investors are thinking when the market moves. Investors tighten guidelines or expand guidelines, right? And what I mean by that, when you find a lender that provides you easy terms, those lending points won't be available for a long time. These lending guidelines are almost like the automotive industry. You're only going to get 0% or 0.9 financing for about approximately 30 months. After that, then they now become a little more strict because they got in, right, that funnel created and filled based on the paper that they want, either A through D paper, right? Now let's look at how to beat the banks at their own underwriting game, how to understand billing and payment cycles. Super important. There might be some that are in the credit repair game. There might be some that are here that understand credit and how to utilize it, but you got to be able to understand what's the difference between a billing and a payment cycle, okay? How to get 10 to 20 and up to 50 times your highest credit limit. The best way to raise your credit scores, all right? So that you are able to use that method where lenders do not want you to know about. Okay. And of course, we want to make sure that you should know exactly what's happening before you apply to any lending institution. If it's with your local credit union that grandma, mom, dad that's been applying for and banking with for the longest time, that's okay. But a lot of strategies and a lot of things have changed, especially with COVID. Okay. So meet the panelists. Obviously, myself, Hiram, I've been in the recreational space and consumer funding since 2003. Have written a lot of different articles and come out in different events where it comes down to publishing with a lot of these consumers and a lot of these consumer lending companies. And in the last 5 years, I've helped business owners to divorce themselves financially from the business. Why? Because you should be able to build corporate credit on your own, not tied to your social. But this is not that type of webinar. This webinar is made to be able to help you, elevate you, scale you to the next level to get those 20, 50, $100,000 credit cards that we all want, the funding that will graduate to SBA loans, the funding that will graduate you to other types of lending programs that are a little more relaxed. And guess what, guys? When you get the approval, that says strictly you're approved, that is it. Now, Ryan, I just wanted for you to introduce yourself really quick. I know I've been taking the mic here, but if you can introduce yourself here really quickly, just so you know, everybody knows you.
Yeah, absolutely. Thanks for the intro, Hiram. So yeah, my name is Ryan Suchday. I've been in banking since 2008. I actually started my career on Wall Street with Citibank. I worked in the investment banking division for about 2 years, and then I moved on to financial consulting from there for about 9 years, and then I kind of got into the lending business from there. So again, ton of banking experience. I've kind of seen how one of the largest banks in the US, being Citibank, works from the inside out, and kind of picked up a lot of tips and kind of underwriting guidelines with my time over there, and then used that to kind of help people get funding, realizing what banks are looking for and kind of evaluating that consumers don't really know on that end.
Perfect. Well, I thank you for that. So one of the things here that we definitely want to cover here is the opportunity to really look and hone in on why banks decline more than they approved. And this is something that you have to know how to go in and how to be able to apply for any type of credit, but you need to really know what you're applying for, right? So after the 2008 economic shift, Dodd-Frank requires banks to tighten up lending guidelines, right? And we're in they're saying that there's some sort of inflation. We don't know. The real estate market is going crazy. All types of industries are going crazy. Things are going crazy, right? So there's a little inflation going on, but in 2008, that bubble busted. And eventually it ended up in the crisis that we found ourselves in that area. So you need to understand who you're going up against. And it's very simple. You just need to know how to fill out an application, understand that there's something called artificial intelligence. Write it down, AI, artificial intelligence, and understand how to apply for things that you need in order for you to get to where? From point A to point B to point C. So we're driving a vehicle, guys. We just need to find that vehicle that's going to take you there to the next level. So per the Bureau of Labor and Statistics, more than half of business owners will fail in 5 years or less. Now, that is very important for us to understand, especially a lot of you that are in business, a lot of you that are thinking about getting into business, or a lot of you that have been maybe waiting on the, in the bench and saying, when do I launch? I don't know yet. The market is soft, the market is strong, or whatever the case is. 82% of business failures are due to issues with cash flow, based on US studies. Staggering 90% of business owners agree with the availability of loans is a problem. And 51% of small business owners worry weekly about capital. So you need to understand what they know about you, about your business, what makes them tickle, in order for them to understand that, you know what, we have a great file in front of us, okay? So even if you think that you're not fundable, or even if you are fundable, a lot of banks will decline you. So let me just cover that really quick, and before I bring Ryan in, and Ryan, you can probably agree to this because you have a lot of that Wall Street knowledge, you have a lot of that investment knowledge, you have a lot of that underwriting knowledge. And even if you're fundable, most loan applications get denied because of what, guys? Potential fraud concerns, not because you don't qualify, because of potential fraud concerns. And what that means is that if you are not submitting the right information, that information does not match your credit report, okay? Because you're using a business email for a personal credit report or personal credit application. If they don't see that information anywhere on your LexisNexis or anything that has to do with what's on your credit profile, then you need to either update your credit report, or you're finally going to have to start using a lot of that information in order for you to get the funding that you need. So one of the things that in talking with Ryan and talking with a lot of these different lenders is that they say, they tell us, lenders fight fraud by matching your company, by matching your application details against what? Other data gathering companies, LexisNexis. You got to know who they are. If you're going to try to go and try to fight anything against your credit, you got to know who LexisNexis is, because they're the biggest. Dun & Bradstreet, Experian, Small Business, Equifax, check systems. You're bouncing checks all when you're in your 20s, now you're in your 30s, 40s, and 50s. You got to get a lot of that stuff taken care of, because those are what we call internal scoring systems with a lot of these lenders that they're using this data to do what? Provide you terms based on something. Now, the most craziest thing, and Craig is on the line, he's my witness. One guy had a Blockbuster account from years ago, and we all know Blockbuster is not available anymore. But guess what? They were able to pull that data and extract that data from them from that consumer and say, wait, what happened with the $238 that they sent you collection on Blockbuster rental videos? And as simple as that is, this was the difference between giving him the $80,000 approval that we're about 95% closed on getting them approved on. But because that information came out, you have to be able to know what's around you, When you're driving your vehicle, you're looking through the rearview mirror. You're looking through the outside rearview mirrors. You're turning yourself to know what lanes to change. So how is it that you're going into an application process and understanding that you have to look at all the different branches and extensions of what your credit really truly is, right? Are you with me so far? All right, let's move forward. So before we get started, what you need to know in order for you to apply. All right, so this webinar is going to be for you if you're trying to start a business or have an existing business, or if you're trying to get high credit limits. Willing to follow our proven process, because listen, we have the banker on the line. He knows the process. He sees the declines and the ratios towards approvals. If you have a FICO score of 680 plus, sometimes depending on what, if your TransUnion is low, but your Equifax and your Experian is high, then we'll be able to find lenders that will be able to help you out with that, right? At least one revolving account with at least a $500 limit, or a mortgage for over a year if no credit card reporting on credit report. If you are free of late payments, if you have 4 or sometimes 6, right? I believe, Ryan, is that, if I'm mistaken, on inquiries?
Yeah, I mean, I think we're looking at 4 or fewer is probably the best, the best guideline.
Best scenario, okay. If you are free of any bankruptcy in previous 5 years, am I right by saying that? Or is there a shorter time, or is there a longer time?
It's actually gonna be 7 years. You know, at least for the banks on the major side of the U.S. banks, 7 years is going to be the minimum they're gonna allow to lend, and then 7 to 10 years is kind of the sweet spot, and then 10 years of bankruptcy falls off your credit anyway.
So, quick question: is there a difference between a dismiss bankruptcy and a bankruptcy that's been already went through and ready to go?
There is a bit of a difference, but if you dismissed with Bank A and then Bank B you never had an account with, but they see that on your credit, they're likely going to decline. And I was going to get into this more when we get into the more slides, but really all banks are trying to CYA being cover their ass, right? So they always want to make sure that if anything goes awry with whatever product they're lending, they are free of blame. So if they lend to someone who has a bankruptcy and they don't pay the bill, they're going to get blamed, like, hey, they had a BK, why did you lend, right? So they're always going to look to cover themselves in case anything goes wrong.
Okay, so side note, guys, side note, really quick, because it's very important. I can't tell you how many times I'll get with a client and it says, hey, listen, yeah, my credit is 780 credit score, but 20 years ago, I had a Bank of America, Citibank, or a Chase Inc. card, and unfortunately, I screwed up with them. You have to be able, before you go, and I love this about the weatherman, know before you go, and I always steal that from them. You cannot apply to those same exact lenders. Take notes. Listen, 20 years ago, remember, I applied for this lender 10 years ago. I had a credit account with them. Unfortunately, the account went sideways. Either I was going through some health issues, or I was trying to help some family out. I didn't find myself in the position to be able to pay for that. Which, am I right, Ryan? You cannot go back and start applying for accounts. They still have records of you.
You are absolutely right, and I'll kind of build on that. Unfortunately, in 2007-8, the whole financial crisis, you know, a lot of banks went under and then were acquired by what we have remaining as the major banks in the U.S. Correct? So BOA gobbled up small regional banks. Chase did the same thing. So if you wrote off, you know, Bank XYZ in a bankruptcy in 2008, and then Chase bought that bank after the financial collapse in 08-09, they now have that record, right? So now Chase in their internal record has, oh, you wrote off Bank XYZ, which is now part of Chase, and we don't want to lend to you. So unfortunately, with the financial crisis and banks kind of consolidating, you know, a smaller bank that you might have included or didn't pay a bill on is now a part of a larger bank. So we do have some tips on how to go back to banks that you might have had issues with, you know, a mortgage foreclosure, a car repossession, bankruptcy, whatever. We do have tips on how you can go back to those banks, start a relationship again with a smaller limit, and then build it from there.
Got it. Makes sense. Okay. Perfect. All right. So also, what this webinar is for you, if you are free of any charge-off accounts in less than 2 years, sometimes there's the exception. You may challenge certain things. They may only show up on your Experian, but Equifax and TransUnion may look pretty decent. So there are lenders that will only look at one specific credit report. And that's where Ryan will come in and be able to assist and say and advise on that a little further down the road. This webinar is not for you if you're not going to follow the process, guys. You have to execute, 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 execute. You have to be able to go and be a nutcase and say, I'm going to do this. I'm going to challenge myself and put this in writing and make this happen. You want high limit credit cards, but will not put the time to use our proven process. Do not have at least one primary credit card under your name. It's got to be primary. Your credit only has authorized users all over the place. So it's great. Listen, when you have to get authorized users to get that score up because you want to buy personal things, the house, the car, the assets, the collateral that you want to build up, that's perfect. But you got to at least have one credit trade line on there that looks experienced, that looks like it can do what you need it to do. And of course, you aggressively been applying all over lenders. I can't tell you how many times we finally get to the 680, 700, 740 score, but we're now going through all these type of credit unions and all these lenders that are putting inquiry on your credit. So one of the things that I want to touch on here really quick, automated and AI underwriting. Write this down. I already told you to write this down. Artificial intelligence, AI. You guys, I'm sure you remember when you applied for a credit card and got the automated instant approval. This is a great feeling because that means that your information match was on the credit report. You had the criteria that they were looking for based on their relaxed or strict guidelines, and you got the approval based on your income. Side note, HHI, a lot of times when it comes down to credit card or any types of application, you got to use the household income method. Household income, HHI. That means that grandma's living with you, auntie's living with you, your spouse or your partner's living with you. So now what you do is you have 4 people that are over the age of 18 and have the ability to use their income. If it's retirement, your W-2 or your self-employed income, which is AGI, adjusted gross income. That comes from a K-1, that comes from a tax return that shows as an owner what you made as far as money is concerned. Okay, so very important that you guys realize that you can use the HHI method. Moving back, lenders and credit issuers have a secret of unpublished set of standards that you must meet in order for you to get an approval. They're hidden. There is a secret. They do not share that. Bank A, Bank B will never deploy and never fire out what they use to be able to approve that lending, to be able to approve that type of credit criteria, right? So you need to understand, and this is the gems that we're going to provide you. They do their own research on you and your business in order for you to be what you need to be able to become bankable, fundable, and how fundable your credit is determines if you get automated approvals. Automated approvals. I'm tired of talking to underwriters, guys. I'm talking in third person. I'm tired of talking to underwriters that had a really bad day. That morning when they took their kid to school, and all of a sudden they meet your application the next morning and they're putting emotion into it. Computer does not have any emotion. Humans do. They have a bad day, they will determine what type of eligibility you will get qualified for based on what? On their emotion. That's why artificial intelligence is the most important thing that you can get approved for, because automated approvals or artificial intelligence, excuse me, is the way that you need to get approved. Because if you put the right income, the right information that's on your credit report, you will get equals the approval that you need. So Ryan, please touch on this very briefly, because I think this is super important for them to understand.
So when we're looking at AIs, you have to understand that in today's world, there's very few human eyes looking at any of these card applications, car loans, even mortgages at times, right? So you have to know exactly what the computer is looking for on your credit for an approval. Now, computers, unlike humans, don't have any way of determining that this is a small issue or a large issue. All they can say is it's an issue. So if you have a collection reporting on your credit for $20 because you went to the doctor and the insurance company messed up and charged you more than they should have, and you have an open collection for $20, or you have an open collection for a timeshare you never paid and it's $20,000, the AI sees a collection, negative, and then declines you, right? So you have to know going in what issues are going to cause the bank's automated systems to red flag your account. Another thing, as you were talking about with banks looking at fraud, is if you have an address where you've applied for a bunch of things, being your home address, you recently got a new business PO box, and you're like, oh, you know what? I want to apply for a business card. Let's put the PO box on there. You apply. The last 10 years, every application that the credit bureaus have is your home address. This time you're applying with a different PO box, nowhere on your credit profile. They're going to decline you. They don't want the risk of someone stealing your credit. They got sent to a PO box. They then use the money. Then someone calls it as fraud, and they've lost that money because they can't get it back. So they're going to decline you. So you have to know exactly what the computers, what the AI software is looking for to make sure that your file does not get flagged. Because unfortunately, no human's looking at it, and you're not on the phone telling this person, hey, well, I got a new business, I got a PO box opened, I'm getting it sent there. They don't hear that. They just decline it and move on.
Perfect. So when we look at a credit card application, Ryan, right, and it's very important. I think a lot of people need to know. And we touch HHI, right, household income. What other things besides having their information and the data correct on their TransUnion, Equifax, and Experian? What other information are a lot of these lenders putting up against or software data gathering companies, right? Like in business, obviously we finance a lot of business owners, and when they go against Dun & Bradstreet. But what other information on these applications are they looking for besides the home address or the business address or PO box or either telephone numbers that are, from a burner phone or something that you're using because you don't want that to be done, you don't want people calling you at 10 o'clock at night.
Yeah, I think people will be shocked as to how much information banks have and are able to access on a person, right? So there are things called public record, and as civilians, we don't have access to them, but these banks have access to, what car did you have in 1997? What color was that car you drove in 97? What address did you live at in 2006? What's the zip code there? So they have access to all this information. So when you're applying, if you're applying with a brand new cell phone or new business number, you're applying with a new business email or an email that you just set up a few weeks ago, or an email that you haven't used in 10 years. These are all red flag items because banks are able to look at every application you've done on credit cards, on car loans, on mortgages, on utilities, cable, things like that. So they're going to put up phone number, email address, physical address, even name, right? So if you recently have gotten married or changed your name and you're applying with a different name, a lot of times that causes a fraud issue. And again, banks, they have thousands upon thousands of applications an hour, right? So if they have to dig and kind of figure out why is this person's name changed or why is this address different, they don't have the time or the bandwidth to do that. It's easier to decline and move on because at 1% that is a fraudulent application or someone has stolen your identity is not worth the risk to them. So you have to be very cognizant of what information you have put out in the past and kind of make sure the same information that you're putting out now is matching. And more to that, if someone changes their name due to marriage or whatever else, if you buy a new house and you move, you have to be very proactive in contacting your current banks, your current loan holders, and change the information on their end so they can then update their systems, and your new address, your new name, your new phone number is reporting. So it's a good lesson for people to learn that, as soon as a change happens, a material change in address, name, phone number, email, contact all your existing accounts and get that updated right away.
Perfect. So one thing that I do have a question on, because a lot of times we'll get applicants that come in, right? And when they come in, one of the biggest things that they're going through the application process, they're moving, they're getting married and all that good stuff. So your suggestion is to be able to contact who at that point in time? Do you, like, for example, okay, so I applied for Citibank. Citibank sent me that pre-approval letter, said you can get approved up to $30,000, $50,000, $100,000 promotional. They get that little promotion, account number in the bottom and say, okay, call in and see if you can get qualified. So what we're seeing is that a lot of times 40% of those applications that go through, they get declined. So are they getting declined because of the fraudulent activity that they were not able to update them with the right information? Because again, they're moving. They just got married and they're going to move in 2 weeks. So what is a good suggestion there?
Yeah, I mean, I would say that the pre-approval letters you get in the mail are all from the marketing teams. You have to realize that at any large bank, right, the job roles and departments are so segregated. If you look at the investment team versus the marketing team versus the underwriting team, you know, they're most times in different buildings, right? So when I was working in New York, I was in the investment bank team, 88 Greenwich, downtown in Tribeca. Another team was, you know, Midtown East on 48th and 2nd, you know, clear across town, right? So we never interacted. So you have to realize that those pre-approval letters are coming from a marketing team, and they're getting paid and they're getting bonuses by number of approvals that they get, right? So the more people applying, the more approvals they're getting, the higher their metrics are. So they're going to be sending them out to really anyone they think is borderline based on the criteria they have in their funnel. So, you know, a lot of people think that I got a pre-approval letter, it's money in the bank. That's not the case, right? So these are at the end of the day, just marketing teams sending things out, you know, hoping to get a bite. If they get 5 declines for every 1 approval, they're not getting dinged for the declines, right? They're just getting an approval on their record, and that's going to help their bonus numbers. So I would say a lot of times that pre-approval was declined due to you know, the person not having the necessary credit, and they just got the pre-approval letter as a marketing gimmick. It wasn't someone from underwriting saying, hey, this person got great credit, Citibank really wants them, let's send them a pre-approval letter.
Got it. So one final question before we move on, because I think it's the most important part that everybody wants to know. If you look at TransUnion, Equifax, and Experian, what is the minimum credit criteria you take? All right. So we have over 300 credit card companies that are out there, from the small credit unions to the navies, you know, to the USAA credit unions, and then we start moving on to the big banking side of things. What is a culmination of credit, minimum credit score, to be able just to start the conversation process with them? What would you say to everybody that's here tonight? Because I think this is very important. There's a lot of confusion that's out there. So people will say, yeah, I'll get credit 1, because they'll go as low as 600 credit score, or even Capital One sometimes may go to 620, you know, 640. But then I'm looking for high credit limit. I'm not looking for the $500, $1,500, $3,000 credit accounts. What is the minimum credit criteria that a lot of these lenders are looking for in order for you just to start the conversation and get some sort of pre-approval with them? Or
that's a great point that you made, right? So you can definitely get approvals with a 620, 640, 650, but it's not going to be a material amount. So when I say material amount, I'm looking at you're getting credit lines of 5,000 and higher, right? So if you have a 620, 630, you apply to Credit One or Merrick Bank, something like that, they might give you $1,000, $500 starter line, which is great, but it's not going to be anything material. It's not going to help you move the needle to invest in a business, start a business, fill POs, anything like that, right? So we're looking at a 680 and higher for most of the major banks and the smaller regional banks. We're looking at a 680 and higher, and that's going to be kind of the cutoff for a material amount. If you want to start getting limits of 5, 10, 20, 30,000 or more, that's the kind of minimum credit score that we're looking at. And I'm sure we'll dive into it later, but you know, a 680 credit score with the help of you or with Herman, that 680 can easily, in less than 30 days, become a 750, 760, and that person can get $80,000 in funding. Whereas a person with a 740 who has no credit depth and no credit history might get less funding than the 680 that was fixed up by you and Herman. So we'll kind of dive more into that and kind of discuss, you know, what factors lead to your score being high, what factors lead to your score being low, and then what are some quick fixes that people can do on their own, or with the help of you and Herman can easily, you know, get their credit score 20, 30, 60 points higher in less than a month, and that would then open up doors for funding to many different banks. I think it's still on mute there, Hiram.
All right, so thanks. I think it's very important that we all recognize this because it's there's a certain threshold that you have to be able to accomplish, that you have to be able to get to, in order for you to be able to obtain a lot of these artificial intelligence approvals. So let's dig into this here really quick. Moving forward, so let's talk about artificial intelligence, because I think it's very important. A lot of us may know this, and a lot of people may not. So there's a lot of artificial intelligence across a lot of different platforms in industry, right? But what is credit artificial intelligence interface, known as CAII, all right? CAII. And I think the most important thing is that AI is where a lender uses machine learning technologies, okay, to update analysis instantaneously using what? A consumer's credit report. And they do this through a soft pull method because there's so many data gathering companies that are out there that will pull your information. But AI, the purpose of AI is to optimize risk management insights and create more accurate recommendations. So what we take is a scientist or engineers that understand the process of being able to, instead of having a human underwriting the process, we take this intellect, put it into some sort of incubator, and start extracting information, going against different data gathering companies to be able to pull this information together and what? Mitigate the risk, right? So this process is based on years of gathering data to do what? Implement a more lower risk mitigation to ensure that what? Machine intelligence makes more accurate decisions than humans do. Machine does better than humans a lot of times do when it comes down to investors saying, this is the specific profile that I'm looking for to gather and bring on board as a file for our business. Obviously, this system was created to speed up what? The decision-making process. I have to stay competitive. In order for me to stay competitive, I have to be able to do what? I have to be able to get fast approvals because I am getting thousands of applications on a hourly basis. My marketing team deployed to 80,000 businesses across the United States. I don't have the manpower to look at every specific file and run an approval or make a decision based on the profile. Therefore, I use artificial intelligence to make a decision based on what the lenders are looking for. So you get the scientists, you get the engineers to put it all together and say, this is what we're looking for. So there's this, what we call guidelines. It's a set rule, standards, guidelines that they have to be able to make a decision on a profile. We love artificial intelligence, by the way, right, Ryan? So
absolutely. Easier to get around in game.
Exactly. So AI engineers use that mapping set of lending guidelines, what? To create rules, formulas, and algorithms. Rules, formula, and algorithms. If we can beat the rules, formulas, you will get the algorithm of one exact word, and that's the word that we all want to hear: approvals. Okay. And if qualified using this method, you can get what? 10, 20, 30 times your highest primary trade line without what? Putting a hard inquiry on during the credit pre-qualification process. Am I right, Ryan?
Yeah, absolutely.
Okay. So AI underwriting rules. This is something that you have to understand, and you already covered that. AI, basically, when it comes down to that, let me scroll down here. All AI underwriting has rules that it has to follow. The machine has to follow a set of rules and guidelines in order for them to know that you can get an approval. So what are they? Free of late payments in the previous 12 months. So if you are still struggling with late payments in the last 12 months, is the 12-month rule. There's a 12-month rule and there's a 24-month rule in order for you to get your higher limits. We got to connect with Herman, right? We got to get this removed. There should be 6 or fewer inquiries. And you spoke on that earlier. You said 4, I wrote 6, but 4 inquiries in the past 6 months. Free of any bankruptcy in the previous 5 years. Now we know that it's 7 years. There should be a credit card over 1 year with at least a $600 limit. Primary, not AU. Free of unpaid collection. Free of any charge-off accounts less than 2 years. Am I on point, Ryan?
Yeah, that's all perfect.
Okay. Now, when it comes down to that, these are the type of approvals that you will get when you go through the Citibanks, the Bank of America, the Capital One, and when you go through all these different companies, you will have your credit has been reviewed and you pre-qualify for unsecured funding program. Let me touch on that. Unsecured is when you have a $5,000, $20,000, $50,000 limit without having to put what? Collateral. What's collateral? I have a home that's free and clear that my grandma gave to me, or I paid my home off and I don't have to put it on the line in order for me to get the approval that I want. Okay. Collateral is when you go up to the lender and the lender says, hey, you've been approved. And you're saying, well, I came with my title to my 15 trucks that I do over the road trucking. And guess what? I came prepared for you to put a lien on it in order for me to loan me money. That's like a CD. Okay. You have $20,000 hanging on your checking account. Obviously, I'm going to recommend not to leave $20,000 in there, especially if your savings account is weak. You need to move that money into more savings and use your checking on a day-to-day to expense, right? That's a different webinar that we'll have on how to fix books and do everything so that your personal life can look really strong when you're presenting yourself in front of a lender. But when you get the automatic approval and says, congratulations, you've been approved for $20,000 or $50,000 or $100,000, this is what you need. You don't need to be putting up any deeds. You don't need to be putting any liens or anything on anything that you own. You just need to know strategically to have your information on your credit report match what says on your application. If you don't use that information, guess what, guys? They're fighting fraud. They're not going to qualify you. And Ryan, can you elaborate a little more? How long, a lot of times, if you fill out an application, how soon can you apply again where these lenders don't put you on ice, for another, whatever time being before you can apply again?
Yeah, usually it's 6 months, right? So that's why it's really important to make sure when you take your shot and you do the application, you have kind of all your ducks in a row. You're applying with the right information, the right income, and the right credit profile. Because if you do an application today, you put the wrong information on there, you're declined. Most banks are going to want to wait 6 months to submit an application again to approve you. You can apply 5 more times in the next 5 months, but you get 5 declines and you're going to waste inquiries. So for a bank to take your application again and then possibly get an approval, it's going to be a 6-month wait.
Got it. And I love that word, right? I love that word that you just said right now, that you have to wait and be able to then get pre-approved again, because that's a lengthy process. A lot of times, if a lot of lenders say, for example, a lot of credit unions, they don't use that whole method of advanced, the new modern age of getting applications approved. They use that old school manual underwriting piece of paper. They take your credit report, they pull it, so you have an inquiry, then they look at it and then they compare and contrast to see if they can give you some sort of approval. So waiting is very important, guys. This is something that you have to be very patient. You have to be patient through this process, because as you're going through these, if that meant that you only have to wait 1 or 2 more months, don't waste that inquiry. Don't waste that inquiry on that one approval and get maybe a lower limit where you could have gotten, maybe instead of that $5,000 limit, you can get $20,000 or $50,000 limit. So it's very important so that you have that patience through this whole process, because if you think about it, when you turn 18, you can apply for credit. Maybe mom and dad put you on as an authorized user on their American Express or one of their high limit accounts. But it wasn't until about 20 or 21 that you got that American Express, that you got that car loan on your own, that you got that house on your own. Is very important and crucial. Okay, so how can we help you, right? Because I think this is very important, Ryan. A lot of people are like, okay, so how do I use artificial intelligence in order for me to get those higher approvals, right? So how we can help you is, and Ryan will testify to this, you will be able to use our AI, our underwriting technology. We've spent money, we've spent time, we spend a lot of analytics and development and understanding how banks think in order for us to put that process and use a very similar process that they use in system to mimic exactly what they do. And if we can mimic exactly what they do, you'll be able to use a backdoor process to do what? Get the approval that you need. This is a process that, and a technology that you'll be able to get 10, 20, even 50 times your highest limit. You'll be able to run your credit using what they call credit nav. Is that right, Ryan? There's a credit nav process out there or some sort of link that helps you pull your credit, you pull the dollar, and you'll be able to get your credit report run on the spot.
We've worked hard to kind of create this to where, we're getting a soft pull for $1. So you're going to get the credit nav report, which is going to have a tri-merge of all 3 bureaus. So people have to understand that, a lot of these free credit reporting websites only give you 1 bureau. So you're only seeing 1/3 of your credit. So Credit Nav has Experian, TransUnion, and Equifax. So it's going to be a tri-merge report. It's going to show you the credit data for all three bureaus. And what people also have to realize is that when you apply to a certain bank, Citibank might look at Experian, Barclays might look at Equifax, Capital One might look at two of them. So you want to know exactly what your credit looks like on each bureau, and then as a whole, because some banks will use one, some will use a combination of two, some will use all three. So you want to make sure when you're looking at credit and looking at your credit profile on one of these monitoring sites, you get one that has all three, so you have a full picture of your credit. So Credit Nav will give you that, for the dollar pull, and from there we can kind of determine exactly what each person's credit profile looks like. We run them through our own, AI underwriting, which was built on mimicking the banks, and from there we can determine, based on our AI, you're going to get 40,000, 60,000. And if we have to fix a couple of things to get your credit there, our AI has that built in. So whereas if you submit that application to a bank, it will be a decline. Ours is going to say 60,000 with fixing A and fixing B. And we can help you fix those. And obviously with your and Herman's help, fix those two issues and then get 60,000 in approvals versus a straight decline from the bank when you applied the first time.
Got it. So I think this is very important, right? Because a lot of times, and you guys, some of you that are here tonight, you guys have experienced this. You fill out an application and you say, unfortunately, you didn't get approved, or we're reviewing your credit report. And then in 7 to 10 days, we get what we call adverse action notice. Every lender has to provide this, letting you know that unfortunately you didn't get approved based on a risk-based pricing, right? So your first step is going to get the adverse action notice. That'll go to a department that's in somewhere in the mailroom, and it's going to get that information sent out to you. But then at the same time, they're going to provide you what they call adverse action notice, and a risk-based pricing. A risk-based pricing is what's going to tell you and identify that how you compare to the other people in the United States that are in that category, 10% of 800 credit or close to 800 credit score. Then you have about 20% that's anywhere from that 720 to about 780. This is what they call a risk-based pricing, and every lender by law has to provide you some sort of feedback to let you know this is the reason why we didn't approve you in the first place. But one of the things that we grouped up with Ryan is to let's go through and use our artificial intelligence system, because you'll be able to get approved, you'll be able to send the approval in and get the approval right on the spot using artificial intelligence. And then at the same time, you'll be able to use what they call Credit Nav, because there's a big difference. And Ryan, you've seen it so many times. Somebody pulls their Credit Karma, Advantage 3.0, or somebody else will approve some sort of other a score that is just not accurate, right? Because there's so many different types of credit reporting agencies that are out there that will only grasp or only report enhanced, right? So guys, write this down: enhanced credit reports. If you go to a car dealership and you've had great payment history with Ford Motor Credit, but your revolving credit card or your mortgage is horrible, you've been missing every other payment, then you will have a strong credit when they pull their FICO, their Beacon, or whatever internal scoring system they use, because you seem stronger in automotive. In mortgages, the same way. You've had 1, 2, 3 mortgages on there. Maybe you're in real estate, you're doing fix and flips and buying holds, and your real estate score is enhanced to be able to get your higher score. So you have to be able to look for what they call a non-enhanced credit report, like Credit Nav, that'll be able to give you all the scores flatline with no enhancements to it, because a lot of times that's the biggest confusion. We'll submit an application or a file because you have these certain credit reporting agencies that are not reporting the information accurately. Ryan, can you just touch on that very briefly, because this is very important that everybody understands?
Yeah, so what you have to understand is that when you apply for a credit card line of credit, banks are using a FICO score. So FICO is a proprietary algorithm for a credit score. And I believe it's owned by TransUnion. So that's the bureau that actually owns that algorithm. And they license it out to the other bureaus. And based on that, you get a FICO score. And when you apply for a card, banks are using that FICO algorithm to give your credit score, assess your risk, and at the end of the day, say approved or declined. Now, no one is privy to that. No one has access to the algorithm, but some sites use their own algorithm, and some sites try to reverse engineer FICO to the best of their ability and try to get as close to FICO as possible. So I can give an example of where, Credit Karma, a lot of people like to use that site because their score is somehow higher than it is on other reporting sites. Now, why is that? FICO is out of 850. So the highest credit score on FICO is an 850, can't get any higher. Credit Karma scores out of 900. So by default, on their algorithm, you're going to be 20, 30, 40 points higher than your true FICO. So when you're looking at Credit Karma, you feel great about yourself. Oh, I got a 760, my credit's great. You apply to a bank and like, no, your score is 710, declined. And you wonder what happened is because they're not using the FICO algorithm or anything really close to it to give you your credit score. So you definitely want to go with a monitoring company, a reporting company that tries to mirror FICO as best as they can to give you an accurate score of what banks will see, not just an artificially high score to make yourself feel good, but in real world has no benefit because you're gonna get declines with that score.
Got it. Makes sense. Hey guys, I hope you're writing that down because I just learned that today. Thank you, Ryan. I think that's super powerful because a lot of times we don't know when we're applying for something what it really truly is, right? So it's very important that you understand these different algorithms and a lot of these things that they use as a platform to be able to determine any type of funding eligibilities. All right. So moving along here, guys, I just want to share this here with you. So what we do here, right? What we can do is, if approved, you will get a one-on-one counsel with a banking underwriter to proceed with funding. So this is more like reverse engineering, where a lot of times you get to apply for something and then you get the adverse action notice showing you your risk-based pricing. So it doesn't really show you a lot of information on why, how, and why did I not get approved? So what we try to do is accomplish is to be able to get first the pre-approval process, 40, 50, 80, $100,000, and then have you pull your credit nav so that you can do what? Now speak to a real true underwriting that you can ask the questions in order for you to know what? Why did I get approved? Why did I not get approved? But most importantly is why you got approved. So during this process, what we want to do is we want to teach you how to stay on track to get what? Higher limits in 6 and 12 months. So Ryan covered it really well. If we can get your approval now in July, 6 months from now, we're looking to see how we can expand that, use other lending platforms. And then in 12 months, we can find other lenders that will get you even higher approvals. We have folks that have gone through the process and they're at $200,000, $300,000, right? And of course, what ends up happening is we're going to create opportunities with lenders that have turned you down in the past and now overturn that into approvals. Ryan, have you seen that where we may potentially got a decline on an application, but have overturned it based on maybe fixing a little bit of information, maybe just making the call and say, hey, I messed up, I fat fingered it. Is that possible when it comes down to applications?
Yeah, it absolutely is. And it works in two facets. One is to get a decline overturned to an approval. And secondly, there are times where, we'll work with people to get them credit applications submitted. And then if they get one for 10,000, we'll call in and get that 10,000 raised to 20. And all that kind of goes back to what you're saying about the AI, the automated approvals, and then how to work the system. So, we have expertise in knowing, what banks are looking for. And there's two people that can make decisions at a banks. One is an actual underwriter, and one is going to be the AI system. So if you apply to Chase Bank and you have a $20 collection on one of the credit bureaus, in most cases, the AI is going to say open collection, red flag, decline. So we'll look at the credit and say, hey, you have one collection for $20 open on one bureau. We'll call in and we'll speak to an underwriter and say, hey, listen, we know that you declined this application. Most likely it was due to this open collection. If you look at the other two bureaus, the collection is not there. Can you please rerun the application, pulling a different credit bureau and see what you can do. And a lot of times the underwriter can manually look at it and overturn it. Conversely, if we call in and say, hey, we applied for a card and we got 10,000, if you look at our client's income and you look at their other past accounts, you look at their payment history, we really feel they should get 20,000. Can you please review it and let us know? A lot of times we can get that increase to 20,000 as well. So a lot of it is knowing if it's declined, why was it declined, right? And that's something that we can help with. Whereas when you apply on your own and you get a decline, the bank doesn't tell you it's because of X, Y, or Z. They just say it was declined, and you get a letter in the mail saying very generically, your decline was based on credit information pulled from Experian, Equifax, and TransUnion. And it's a very canned, generic response. We know what issues might be causing the decline, and we can proactively call the human underwriters and kind of try to get them to work around that. So there's a lot of value in knowing what the AI is looking for, and if it's declining, what issues are causing a decline, and are we able to work around that when talking to a human underwriter?
Makes sense. Okay, so perfect example. We got this client, right, looking for an e-commerce store, and start a business, startup. Just got their EIN, got their business form, they got themselves an LLC, right, with Herman. Now we took this business, right? Now they got the Shove Corporation with Herman. They've been 2 years in business because of the Shove Corporation, and we were able to get them $100,000 to $140,000. Now this is done through a combination of different lenders. Am I right? This is not just Bank of America giving you 100 to 140 grand. This is maybe 2-3 different lenders that are using this strategy.
Correct. And you have to understand the reasoning behind that, right? So as you touched on before, this is unsecured funding, meaning there's no collateral. So, if worst comes to worst and you cannot pay your bill and you tell the bank, you know what, I don't have the money, sorry. They can't take an asset back to recover any losses. They can't take a house. They can't take a car. They have no recourse. So as a result of that, a lot of banks will limit their risk exposure at a certain amount. Now, obviously, the higher your credit score, the better your credit profile, the better, and you can make it look on paper, your risk tolerance will be higher per bank. So someone with a score of 710, BOA might say, okay, I feel comfortable lending 20,000 in unsecured funding. With a 780, the same bank might say, you know what, I feel comfortable lending 50,000 unsecured. So each bank will have a tolerance, a risk tolerance on how much they will lend a credit profile unsecured, meaning without any recourse or collateral. So that's why we would target a couple of banks, and one bank might not give you 100,000, but between 3 banks, one might give you 40, one might give you 30, and we kind of package that together to make $100,000 total.
Makes sense. You guys following so far? So good. So far, so good. All right. Craig, are you? How are we doing? Are you good? Craig is on here. He's one of our business bankers here for LFG.
Craig is knocking out the chat right now. He's crushing it in the chat,
All
answering
right.
questions. Thank you, Craig.
Hey guys. Yeah, no worries, man. I just want you guys to know that I'm here watching your back and making sure these guys are telling you the truth, and they are. It's good to hear, and I'm learning as you guys are, especially on the credit side. So heck yeah, guys, all good stuff.
Good deal. Thank you. All right. We find now that we have, right. So let's look at a starting point, right? To higher limit credit cards. You need to be able to, and correct me if I'm wrong, Ryan, because you got so much in-depth information on this. You have to pay all your credit accounts at least 10 days before due date. Is that right?
Yes, the quicker you can pay it, the better. And that doesn't really reflect on your credit report per se, but every bank has internal record of this. So if you have a Chase account that you're paying the day after your statement closes, Chase will take note. And when you go to apply for a new line, they'll be like, oh, this guy pays his bills the next day, let's give him more money. Or this guy waits till the last day, meaning he's probably kind of tapped out and he's struggling to make the payment, let's give him some less. So banks definitely take note of that. And the quicker you can pay your bill, I try to pay all my credit cards the day after the statement closes, right? That shows the bank that this person used the credit because it was convenient and because they got points and they had the cash to pay it off the next day, not that they were living on credit and waiting for the next paycheck to come in to make the payment.
Got it. Perfect. Now you have to ensure that all creditors were reporting legal name, address, date of birth on personal credit accurately, right? So you got to make sure we connect with Herman and make sure that information that is not up to date, you have to remove that. Because in order for you to get to bigger and better accounts down the road, you have to be able to have that accurate information in there. Again, a lot of lenders are fighting against fraud. You have to be able to make sure that your information is accurate. Artificial intelligence looks at all different types of gather data in companies. Ryan, if you can just count from like just your hands, how many data gathering companies are out there?
Oh man, it's LexisNexis. I can think of 5, 6 off the top of my head. So there's a whole bunch out there.
There's a lot out there. Okay. Keep revolving balance to a limit of no more than 30%. Is that right?
Yeah, 30% is a good rule. And this is something that, again, with the AIs is very important, right? So let's just, for easy math, let's say you have 10,000 in available credit and your outstanding balance right now is $3,100. So you're at 31%. Now you apply with that 31% usage rate, you'll fall into a mid-tier approval and you'll get 5,000 in new credit line. Now the same credit profile, nothing's changed, but the balance is 2,900 on 10,000. You're 29%. The AI's got a flag at 30. So at $2,900, you're getting a $10,000 approval. So you paying your balance down by $200 can get you 5,000 extra or double a credit limit. So that's very important when we're looking at AI approvals, because again, the computers don't have anything to say, oh, they're at 31%, but it's only $100. It's 31%, right? And that's a red flag, it's over 30. So that's something that's very important to know, especially on the AI side, because that $100 might make a difference of 1 percentage point, which puts you over their threshold.
Got it. Okay, so if I understand this correctly, right, we got to make sure that we also look at income ratio, debt to income ratio. Guys, for some of you that are out there, some of you may know mortgages, some of you have financed in the past, but 40% debt to income ratio. This is very important. That means where they take all your income times all the what you're paying out there, your exposure, your debt that's out there. You have to find yourself paying under 40% or find yourself under 40% debt to income ratio. Now, when it comes down to getting high credit card limits, we use that HHI method. You can overcome that. You just got to do a little math. You have to do a little math, right? You have your mortgage, you have your credit card payments, you have your car payment. Now, obviously, unless you're doing Experian Boost, please. If you're doing Experian Boost, you need to. There's a hate and love relationship that I have with Experian Boost. But for those of you that are out there that are using Experian Boost to boost your credit score because you're reporting, some sort of a light bill or telephone bill, whatever the case is, remember, the more that you put on Experian Boost, you're actually now increasing your debt to income ratio. But when it comes down to the HHI method, household income method, you need to increase that, because when it comes down to credit card applications, they're not looking for a pay stub. They're not looking for a W-2. If you go to the normal lenders, yes, they're going to ask you for your most 30 days of recent pay stubs, your W-2, and probably your tax return. If you're K-1s or Schedule Cs or 1099s. But it's very important that when you're doing a credit card application, in order for you to get a higher approval, you're using methods in order for you to get a higher limit, and using household income because it is a credit card application. Okay, keep no more. You make sure that you keep no more than 6 recent credit inquiries in the last 6 months. Have no open lates, collection judgments, or public records on personal and business. Now, some lenders will overlook some of the, maybe some of your collections, maybe like a small $20, like Ryan was saying earlier, medical bill, whatever the case is. But you need to make sure that if it's a Verizon bill for $3,000, you got to get that taken care of. Either you get it removed, or a lot of times, Ryan, will you use a credit partner? CP, we call them CPs here, but will you use a credit partner, somebody that loves you, trusts you, willing to do a little stuff for you? get you a higher credit card limit and maybe use somebody with that has a little more experience on the credit bureau to get higher
absolutely.
limits.
That's
And-
something. That's one of the first questions we ask when someone's got, say, a bankruptcy in the last 7 years. Like, hey, your file's kind of dead in the water for the next 2 years, but you have a parent, a spouse, a child, a best friend, cousin, anyone that you trust and that trusts you, that will be able to kind of let you borrow their credit, so to speak, right? So there definitely is an option, and for many people, a good one. So, and kind of a life lesson along that is, being in this business, I've learned one thing is never apply jointly, right? So what that means is if you apply for a credit card and you have a husband, you have a wife, you have a partner at home, apply yourself, don't include them, get your own. Because if you apply jointly and that account goes south, you're both on the hook and both your credits suffer. So you can always apply in my name, and once the card is approved, I can add my spouse as an authorized user. They have full access to use the card, to use the money. But if it goes south, it doesn't affect their credit, right? So always apply individually, not jointly. On credit applications, obviously for mortgages, you might need it because you need the extra income, but on a credit application, there's no benefit really to going jointly. There's only downside if it goes south, it ruins two people's credit. So just kind of a lesson there. But yeah, credit partners are definitely viable and an option we use many times.
Perfect. Okay, so now let's look at an example that something that you ran here not too long ago, helping us out on Incline. We're beta testing this program on artificial intelligence, and this person was not approved for personal. Maybe they overextended on personal credit, but they were able to get a $35,000 to $50,000 approval just for business because they had an EIN number that was age. Herman helped them out, hooked them up with a shelf corporation that had age, a business credit only. So what would make a business a business credit only approval opposed to a business combination with personal? Is
Sure.
it because yeah?
On the business approval, was it a cash card like an Amex business, or was it like a trade line or vendor account like a Home Depot Lowe's card?
No, this was a open network account that you got us approved on. I think it was Chase Inc.
Okay.
And then we got Chase Inc. and we were able to get 30,000 Chase Inc. and $15,000 BOA.
Okay.
So business credit only. I mean, obviously they were yes. With that shelf corp, they had 4 years in business because they had that shelf corp, and the EIN was relatively comparative to that time in business.
Sure.
So why wouldn't a lender give you a higher limit and say, let me give you a combination of or hybrid of business and personal?
Yeah. So what people have to realize is that, and when you start a business, you want to create an LLC for this exact reason, right? You want to create separation between yourself and the business. Years down the line, ideally the business is its own entity, right? So if you look at an EIN number for a business, that's like a social for a person. That's their identity. You can report credit cards and loans to that EIN number, and as time passes, your business grows, it makes money, it files taxes, it is its own being. So if you apply for a business card with an EIN number, and that business has strong credit, has had cards open, has taken loans out, has had debt in the past that is paid off on time, the business can get credit in the business's name as an own entity, but the person who is then applying might have credit issues, open collection, high revolving debt, or whatever other issues. So as an entity, the person got declined, but the business had its own credit, it had its own kind of life of its own with the EIN number, and was then approved for additional credit on the business side. So when most businesses start out, the initial idea is that no one wants to give you experience, right? So if you're 18 out of high school, you look for a job, they're like, yeah, I really want 2 years experience, but they don't want to give it to you. It's like, well, if you gave me a job, I'd have a job and I could work here for 2 years and have experience. The same thing with credit, right? So when you're young, 18 out of high school, or you're starting a business last month, no bank wants to kind of give you that first credit line. But after 4 years of a business taking $1,000 line, spending it, and they got a $5,000 line. They use that responsibly. They got a $10,000 line. So 4 years later, they're getting $35,000, $50,000 in credit because they've built up that entity to have a credit profile proving that the business can take on debt and pay it back in a timely manner.
Makes sense. Perfect. All right. So, guys, I just kind of want to give you the rundown. Now, you've heard all the gems. You've heard everything that we have. Very important. What we want to do here is for you is be able to provide you with some sort of pre-qualification page, right? It is very important that you understand this. Let me come out of this here. Okay. So one of the things that I'd like for you guys to do is to be able to go to a website that we're going to provide you. And this is important. You're going to be able to, are we still, can you guys see the screen? Herman, Craig?
We can see you. We can't see the screen.
Well,
You're not
okay.
sharing anymore.
Got it. Okay. So basically what I need for you guys to do is do this. I need for you guys to go into ladderfinancialgroup.com, LATTER financialgroup.com. Okay. For those of you that want to be able to get high credit limit, get the 20, the 30, the 50, 80, $100,000 like we shown as an example. What we need for you guys to do is if you guys want to take, execute, take advantage of this. We have a lot of artificial intelligence that we've already developed. You would go to LATTER financialgroup.com. And on there, what you're going to do is you're going to go to our main page. We have that same little page on the right. You're going to see a gym owner and you're going to fill out that section, that portion there. Okay. And you're going to put that information in there. The most important thing is we're not asking too much information. We don't need you. This is all soft pull. Ladderfinancialgroup.com. In addition to that, you're going to put your information in there. We're looking for you to put your first name, your last name, information that is accurate and matches your credit report. Okay. Once you have your credit application approved, all right, we're using artificial intelligence. We need to be able to get you through all the parameters of what lenders are looking for. Now, Ryan, how many lenders do we have? 100, 200,
We
300?
have hundreds, yeah. I mean, and based on where someone lives, what state they're in, we have access to more, local lenders. So the network is large, and our AI kind of helps narrow that down based on their credit profile and location and other factors. We can kind of figure out which 4, 5, 6 lenders best work for that specific person.
Got it. Okay. And then if you, as you're going down through the application process, again, no harm, no foul. You put the application in, you get your pre-approval, 50, 100 grand. I just saw one approval just coming for 140 grand, Ryan. This is crazy.
Yeah.
$140,000 instant approval right now for somebody out of Philadelphia. I'm not sure there's so many people in here. We just had a $140,000 application. Now, one of the things that that we also help out is that they have 0%. Is it 6 months, 3 months, 12 months that they be able to use OPM method?
Yeah. So what our strategy is we want to help you kind of start your business, grow your business, and using OPM, other people's money, is kind of what we believe in, right? So all of these different cards are going to be 0% from 12 to 18 months. Some go to 21. So it's going to be a mixture, obviously. So some cards might be 12, some are 15, some are 18. The average will be 12 to 15 months. And the idea here is that you can use that money to fund your business, start your business, grow your business. If you have inventory you want to buy, you need to fill a purchase order. You're looking to buy materials to flip a house. If you're looking to buy, a truck, start a trucking business, whatever it is that you're doing, you can use this money interest-free while the business grows, while you're working on getting revenue positive, and then you pay that debt back before the end of the 12 to 15 months, and you've essentially kind of grown your business using OPM and not money out of pocket.
Excellent. One more time, Hiram, we got a lot of people in the chat asking for that website again, but don't forget, guys, the information that we are sharing with you, we're going to email it out to anybody that registered, and we're going to be texting it to you, so you'll get that link. But one more time, Hiram, what's that website again?
Yeah, it's LATTER Financial Group.
Excellent, excellent. So,
LATTER Financial Group.com. Okay. Now there's one more step that you have to do. If you're on the webinar here tonight, you have to go, Ryan, what's that website that we're set up with that be able to run their credit report? Because there's a two-part here. There's a two-part here, guys.
So Hiram, what I would suggest is so that the website is creditnav.com. So CREDITNAV.com, creditnav. But as you all know, CreditNav is working with Ladder, and because you guys do so much business with them, they get a special rate through you. So what they would probably have to do is go to Ladder Financial, register on your site, and then you can reach out, kind of give them the code that you have with CreditNav, and that code will give them the ability to pull the report for that dollar, and not pay the $30 fee that normally charge for the report. So
Okay.
I think going to ladderfinancialgroup.com would be the best first step, and then they can get access to CreditNav from there with the discount code you guys have set up.
Okay, so my discount trial code is LFG, like Ladder Financial Group Trial. LFG Trial, TRIAL, all lowercase. So if you got the approval while you're here, right, using our artificial intelligence platform, you then go to creditnav.com. Is that right, Ryan?
Yeah, correct. So if that's the trial code, that's what they're going to use on the website to get the discount on there. And they'll see the second they put the trial code in there, the price will change from $29.95 or $29.99 to $1. So without that code, they won't get the discount.
Okay, so one of the main reasons why and now I get it, guys, I get it. You have Identity IQ, you have CreditNav, you have all these different types of platforms. That's cool. But we're looking for more of a flat line credit report that now can be sent to our underwriters, because what we'll do is we'll look at that credit report, we'll match it, and then we'll now send you over to a underwriter. They'll analyze that. Again, it's all reverse engineering. If you get any credit card offered in the mail, typically what they do is you have you fill out, and they say, okay, you qualified or you didn't. We're trying to go the reverse side because we're trying to use a reverse method. It's all about strategy. We'll go in, you go in, ladderfinancialgroup.com, put your information in there in the section on the top right that you see next to the gym lady holding
Hiram, just
15 ball.
1 second to interrupt you there. When they're going to ladderfinancialgroup.com and putting the information in there, I think you said it, but I cannot stress enough. Put your major or your most used email and phone number. Don't put your office number. Don't put a burner email. Don't put your high school email that you don't use anymore. Put your email and phone number that you use daily, that you have used on mortgages or car applications or your water bill or your cable bill or your cell phone bill. That's all in the database that the banks have. And if you put a burner number or a number you don't use anymore, it will come back as unable to run. So what your website is doing, just with people out there, is they're taking the name, first name, last name, the email and the phone number, and they're going to the credit bureau and they're trying to match, Ryan, they're trying to match such day, they're trying to match my email, and they're trying to match my phone number. If all four match, they'll get an approval. If one of those three don't match, it's going to come back as can't run.
Makes sense. Okay, so here's a quick process breakdown. All right, so the first step is going to complete our no obligation, no hard inquiry self-pre-qualification form. If self-pre-qualified, then complete the lender application, right? Because you're going to go through those small steps. You'll receive your on-the-spot approval right there. You're going to know if you're qualified or you're not. If you're not, then if you don't self-pre-qualify, you don't get the approval, then you just need a little more time. Maybe you just got too many inquiries, you just applied somewhere else. You need a little bit of time on ice. You're going to complete the CreditNav link in order to accept your offer. So you've already went from the application, which is few questions. You'll receive your on-the-spot approval. You'll complete the CreditNav link in order to accept your offer. LFG trial, right? We've had over 48 approvals during this webinar. Thank you, Craig. We're looking at everything that's going on. 48 approvals during this webinar. What's the total amount that we have so far?
1.2 million.
$1.2 million in funding or pre-qualifications right now, guys. This process works. If you do it the right way, this process works. Okay.
Say that again. How much?
$1.2 million. Craig, please unmute yourself. Say it. You got to say it, buddy.
2 million approvals just during the webinar.
Congratulations, everybody.
And they're still coming. So guys, the process works. When you use artificial intelligence, you use the right information. Again, later on, if you want to change your payment date, you want to change it to the business, you start getting some funding in 6 months from now, you want to do a transfer liability, talk to your accountant. I'm not an accountant, but you do a little transfer liability, change those loans into business or whatever the case is. That's great. Get yourself to 20, 50, $100,000 right now. Because I promise you, let's not worry about Best Buy and get that nice flat screen TVs. We just need to invest in yourself and the business in order for you now to take that business to another level, or whatever your thought, your visions, your whatever you had in your mind. Take it, execute it, grow. Take that money and put it right back into the business. So once you complete the credit nav link in order to accept your offer, the underwriter will call you to discuss your funding projections. So if you have an approval there, the underwriters will call you. And then again, guys, congratulations on that approval, right? I think that's super important. So let's talk about the benefit of AI approvals. And I won't take too much of your time, guys. Time is money, we get it. Quickest and most effective process to obtain unsecured funding. Minimal impact, no more than I would say 4 inquiries, I would say. Is that right, Ryan? On your credit report on the first round of funding?
And then that's correct, but Hiram, if I'm wrong, correct me, but I'm pretty sure if they have more, I know you and Herman have ways to possibly help them out, so they can always come back to you guys and you'll get them squared away.
Yeah, if that means that we got them $40,000 with 4 inquiries, but the 5th inquiry means that we get them to 100, I'm sure anybody that's on here is going to say, yeah, whatever, let's go. Let's move forward. I'll call Herman after I'm done with it. Right, Herman? So this is going to be a multifaceted funding opportunity. So we want to make sure that you can get some funding now. 6 months, let's look at 12 months, guys, right? It's very important. AI can provide you huge boost towards funding using our proven backdoor methods. Minimum funding projections are anywhere from 5,000 minimum to a maximum of 25, or excuse me, minimum 5,000 to 25, up to a maximum of $125,000. And there's still more opportunities where our team can potentially get you what they call the UBF, unsecured business funding. You got yourself a shelf corp with Herman, and that shelf corp looks good, then maybe we can look at those opportunities as well. So you need to invest in yourself, guys, and this is the roadmap. You're going to get yourself your approval. Please complete the credit nav link, okay, creditnav.com. Put in the trial code LFG trial, lowercase. If you accept the offer, if you accept offer, that underwriter will provide you the one-on-one consultation. Once funded, right, there is a success fee that comes in place of a 9.9 success back end fee, right? So if you get $50,000 on a credit card, there'll be a success fee of 9.9. So that means that $5,000 costs off the 50, but you don't have to pay it up front. That's okay. It's all about investing in yourself, finding opportunities, finding ways to get yourself higher approvals. And so, for example, if we get a $20,000 approval, then you will only pay $1,980 at the back end of that. But you got yourself the 20, the 30, the $50,000 in there.
Hey guys, I got a quick update. We're up to close to almost 2 million now. And David Segal is asking, he doesn't know where to get the approval.
I'll step out.
So the one good thing I heard is we're up to $2 million in funding so far. That's the one good thing I have. While we're waiting for Craig, Hiram, can you do us a solid, because I see some questions coming in the chat. I know if you can share your screen and just go to Ladder Financial Group and just show everybody, because I know everybody's visual. And when we send everybody out the replay, I want them to actually see the website. So if you could just show them what website to go to.
Absolutely.
Excellent.
All right. So what we have here is that once you're in here, let me share my screen. All right.
There you go.
Okay. So once you're in here, Ladder Financial Group, LATTER Financial, FINANCIAL, with all due respect, guys, GROUP.com. Okay. You're going to go to this section right here. Once you click on that, right, because we want to make sure we're SSL security and we're protecting your information. You're going to fill this information out, right? So we're going to put Tom Jones. You're going to use your mobile number, right? Your mobile number that is connected to your credit report and the email. You understand by clicking pre-qualify me, I am providing written instructions authorizing Business Funding Network and affiliates to obtain my personal credit profile or information. This is important. Although we're doing soft pull, we are not going to do a hard inquiry on your credit just so that you can get pre-qualifications. Now, this number says 100 grand, but we just got an approval of $120,000. So whatever, let's move forward with that, okay? Now, the next step you're gonna do, if you get the pre-qualification, you're going to go credit nav. I put nav, creditnav.com. All right. This is where you will, Ryan, help me out here because we work on this all the time. Check my scores.
Yep.
Okay. You will put your information here. Okay. And then once you get my scores, that's where you will enter your LFG, Ladder Financial Group, LFG Trial, TRIAL.
Sorry,
I just want to jump in real quick. We just hit 3 million. Sorry.
Boom. Congratulations, everybody.
It's crazy.
That's crazy. I know.
So you'll be able to go in here, and then at the same time you'll be able to put in put your information here, and then go to enter the trial code, LFG trial, and that's where you will put the dollar in there. Again, these credit reporting agencies are wanting to confirm that you are who you are. That you're not some sort of robot putting some information there just because you want to say, I am such and such. Use the right information, put LFG trial, and then now that credit report will come in there. Ryan, what happens? That information gets shot out to our underwriting team, and then they'll be able to then cover it, all of the specifics of your approval. If it's $100,000 approval, what we call as is, that means that there's nothing you have to do on your credit report in order for you to fix, in order for us to get you the funding that you need. If it says $40,000 to $50,000, if fixed, that means that you may have that $300 collection that you may need to pay off, and then connect with Herman and say, hey, Herman, I get this removed. I don't want to pay this. In a few days or weeks, he'll get that removed. And guess what? We're back at it again. We're getting you the funding. If it says, hey, you have a $80,000 offer, but you got to pay this credit card, that Capital One, for $1,080 down because utilization is at 34% opposed to 30, then that means that, you know what? You'll get the call and say, hey, pay this down. Make sure that you can pay that down, because if it's $60,000 on the line, $1,080 is not a big deal. If we don't have the money, listen, let's talk to somebody that loves you, trusts you, willing to help you out and get it going, right? So ladderfinancialgroup.com is the first step. Fill this out. Then after you get your approval, you go to creditnav.com, creditnav.com. Fill your information out. Go to the next step, pay the dollar using a credit card that is attached to the correct address, and then only pay the dollar. And let's get you scheduled with one of our underwriters so that they can continue the process.
Wow, that's amazing. Thank you so much. So we're up to $3 million. So listen, we gave some specific instructions on what everybody needs to do on the call right now. Anybody who's going to be watching the replay, we recorded it so you can see. Anybody that's on the call right now, if you came in late, don't worry about it. We'll be sending you out the replay of this video. You're going to go to Ladder Financial Group. You're going to get your pre-qualification. Now, we got 1 million questions in the chat, Hiram. So when everyone comes out, when they fill out the pre-application, your underwriters are going to be able to answer all these questions for them, right? I got a mortgage. I got inquiries. I'm going through credit repair. Your team's going to be able to handle all these questions, right? Because there's a lot of them coming to you.
Yes, absolutely.
Excellent. I really appreciate that. Thank you so much. So listen, guys, follow Ladder Financial Group on Instagram right now. And you're going to be entered to win a one-on-one strategy call with Hiram. Listen, Hiram is the CEO of one of the largest funding companies in America. Do yourself a favor and go follow him right now, and his team will definitely pick a winner out. So there's one giveaway we wanted to give to everybody, and having a strategic financial call with one of the biggest low-key CEOs in the country is super important. But listen, Ryan, thank you so much for all the game you gave tonight. Any parting words, any gems you want to give to our listeners that stayed on for this whole hour?
Thanks, Ryan.
Still got like 450 on here. any parting gems you'd like to share with them or advice?
I appreciate the time, guys, and the opportunity to kind of speak on this. And I have a weird passion about credit, and I kind of want to see everyone make sure their credit is being utilized in the best way possible. And I just want to kind of give a few quick tips, which are maybe counterintuitive to what people might think, right? So, people think I have a lot of credit cards. I want to close them to fix my credit, to help my credit score.
Good one.
Right? You have credit cards open. You have history. You have depth of credit. That proves to banks that I've had a credit card. I've had 20 credit cards open for 10 years, and I'm not broke. I didn't go buy a boat. I didn't go on vacation, not pay my bills. So those open cards help your credit. It shows banks that I have gotten cards opened. I've used them. I paid them off, and I can responsibly manage debt. Give me more, right? People are sometimes scared to use credit cards. They think, oh, I have one credit card. I'm going to put it in my safe, and if anything happens, emergency-wise, maybe. Otherwise, I don't touch it. I buy everything on credit. I go to the store and buy a pack of gum, put on my credit card. Why? Because that shows banks when you pay it off on time, you pay it as soon as the bill comes in or within 10 days of your statement closing. That shows banks that you can use debt. That shows them that I can take a card and charge $5, $10, $15, $20,000 in a given month and pay it back. So I'm solvent. I have the money to pay it off right away. So they want to lend you more. One of the weirdest things about banks is that when you don't need money, when you have 10,000, 20,000 in open credit and you want to get 20,000 more, they'll give it to you all day long. They'll give you 50, right?
That's crazy.
But when you've used the money to start a business or you've gone into debt for a new project and then you want 20,000, they tell you to kick rocks, right? So it's the weirdest thing, but that's how banks work. When you don't need it, they want to give it to you. When you need it, they close the door on you.
Love that. And one of the things here, guys, so you guys know, me and Ryan are working on a liquidation process, a skillful strategy liquidation process. Because how many times, Ryan, do we get, hey man, I need to buy a truck, but I don't want credit cards. I just want cash. And a lot of times, how many times do you get somebody that bills $100,000 on a credit card through Amex or whatever these big companies? What is the minimum monthly payment on $100,000? Let's just say, percentage-wise, not monthly payment, but
the
percentage.
thing is that when we're getting these new cards opened, we're getting them interest-free accounts, right? What that means for the person using it right away to start a business, fund a business, grow a business, is that you're not paying interest, meaning that your monthly payment is much lower. So you're not paying interest, all going towards principal. So you're paying 1 to 2% of the outstanding balance as your monthly minimum payment. But because it's interest free, that allows you to make a much smaller payment in that first 12 to 18 months. So you can max it out, go, invest fully into whatever venture you're going into, and your monthly outlay is going to be fairly nominal. And we advise all of our clients, if you get 80,000, 100,000 in credit for easy numbers, liquidate. We can help you kind of take some cash off those cards at that 0% rate, put it in your bank account, leave 8,000 there, and then make the monthly payments from that money. So you're paying back the new credit card debt with the credit cards, right? It's still not money out of pocket. So there are a lot of different strategies to get creative in using money that's interest free, and using money that's not yours to grow and build a business.
I don't think, I hope when we send you guys the replay, what Ryan just said, you rewind it a couple of times, because that's exactly what I did. I got real estate, I liquidated the card, and I used the bank's money to pay the card. So nothing was coming out my pocket. So
and that's the smartest way to do it.
Yeah, that's a major gem right there. And of course, everybody's gonna be buzzing about liquidating their cards. So get ready for those phone calls too. You put it out there. So now they're gonna blow you up on liquidating these business credit cards at 0% interest. So it's about to be goofy.
We're right in the process. Absolutely. I think there's so many ways to be able to take advantage of this, but I mean, there's so many ways that you can contribute to this. I mean, real estate. How many homes out in Philly that you can potentially buy for $50,000, $60,000, $80,000? You get $100,000 credit card. All that thing needs a fresh paint, floors, and quick floors, and you invested 10 grand. All of a sudden, you just milk that thing and just turns it into 200 grand. Exactly. How about that profit? Exactly. We've seen it day in, day out, but that's powerful.
And listen, to everybody on the call, I guess I have to do a better job of promoting this, but listen, it's not just business credit. You need funding for your rehab deals. Hey, Herman, I got these cash off the cards. You know, Ryan gave me the game. Hiram gave me the game. I got 50,000 cash. I put my down payment down. I need some rehab money. Contact us. We're going to help you get the rehab money. We got great deals and great rates for that. So we fund everything. So not just business credit, but we're here to support you in whatever you want to do to fund your dreams. We got you. You need help with the credit, we'll help you with the credit. We gave everybody the blueprint tonight. We got more blueprint comments. We're going to be doing these webinars a lot more. All you got to do is execute. Money is not the issue. It's all about you executing. We made it easy to get the money.
One quick thing that you just said for the rehab stuff. I mean, our funding process is great for that, because if you have a rehab starting today and you get 100,000 in 0% money for the next 15 to 18 months, you put that money in to pay for plumbers, electricians, materials, paint, whatever. You sell that house, you fix it and sell the house in the next 5 to 6 months. That money is still there for the next 8-10 months interest free. You can do that twice. You can do it
Twice.
3 times, right? You can let the
That's
money
right.
roll over, and you can do 3 rehabs in that 15-month period, and you've tripled your revenue by doing 3 different deals using this one funding source.
And here's what's crazy, right, Ryan? Because this is how I started my real estate journey. Once you pay back that money, right? Do you know what relationship you just set up with that one bank? And remember, you probably got 3 or 4 credit cards now. Now you just paid off 100,000, 150 in total within a year. You're gonna go back to that bank and be like, hey, what's up? Now that's how you're getting a $60,000, $70,000 credit card, just one. You know what I'm saying? And now you just did it times 4. It gets goofy really, really quickly. So absolutely, thank you for that, Gem. Again, everybody, go and follow Ladder Financial Group on Instagram right now to enter to win your one-on-one strategy call. It'll be the best strategy call you've ever had. You guys follow me on Instagram. You see how my business has 10x. This is the reason why, and I'm glad we got these power players on the call tonight. And I'm sure they're going to give you that same information that they blessed me with. I truly appreciate it. So everybody that's on the call, don't forget, this call is recorded. We're going to upload it everywhere to YouTube. We're going to send you a text message, email. We're going to bother you. We got your information, but we're going to make sure you get this information. Send out the link. I think we're up to $3 million in funding in just one phone call. We're definitely going to do more, and we're looking forward to helping everybody else. Hiram, Craig, any parting words for our members that are still on the call?
Exactly. Herman, I want to drop a tease. Can you hear me?
Yeah, I can hear you.
I want to drop a quick tease real quick. When we get back together on the next webinar, I've got a lot of information, some tidbits on the liability and the difference between using credit versus debit card. I know there's a lot of people out there that are guilty of it, and I know you guys know what I'm talking about. If you got that Disney Channel hitting your debit card every month, there's a liability there, and as you travel. So the power of the credit versus debit is where you really need to be. So I'll get into that as well on the next webinar, and I just want to drop a tease for the next one. That's all. Thanks, everybody.
Excellent. Hiram, any final words for the group?
Hey, listen, we're up to 3.7 mil. So let's keep it going, guys.
Keep it going. Keep it going. Congratulations to everybody
Congrats.
on the call.
Thank you.
Gentlemen, thank you so much. Everyone have a wonderful, wonderful evening. We're going to do these webinars at least once a month, have some great speakers to come on and give you exciting game and to raise some money. I'll talk to you guys real soon. Thank you so much, Ryan and Craig and Hiram. Have a great evening.
Thanks, really appreciate it, Herman. Thanks, guys.
Peace.
Take care, guys. Bye now.
God bless.
God bless.